Hello everybody, good day, good morning. This is the Forex Fundamental Analysis brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Okay, so as we begin, first of all, some basic housekeeping, a few disclaimers. Risk disclaimer: trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And about this webinar, a hypothetical trading disclaimer: the information provided here in this webinar is general market commentary and does not constitute investment advice. Okay, and a quick presentation of myself. My name is Yohay Elam. I used to be a retail trader. I used to be a computer programmer. I founded Forex Crunch back in 2008. I focus on fundamental analysis on the site and also here on this webinar. Okay, so let's begin. On the agenda today we have stories moving markets. We're obviously seeing a stronger dollar, especially against majors. The next events to look out for. Key levels of support and resistance. We will use the MT4 platform brought to you by OctaFX, and we'll do it for all major currencies. So this includes, when we talk about the US dollar, we'll focus on dollar yen. When we talk about the euro, of course, euro dollar, and the pound dollar, which is quite interesting in the past few days. We'll then move to the Australian dollar and finish with the Canadian dollar, which also looks quite interesting. Okay, so the main story in markets now is that the Fed's hawkishness is keeping the US dollar bid. Okay, so we have also the Bank of Japan remaining dovish, and the US dollar is the strongest against the Japanese yen. That's why we're seeing the best reflection of either US dollar weakness or US dollar strength in the in dollar yen. This is why I like this pair more than the dollar index, which is mostly weighted with the euro. Okay. Another thing to note is that there was yet another terror attack in London, this time directed against Muslims. And again, it dampens the mood but does not move markets. So the influence of these tragic events is having less and less influence. We've seen that also last week with the shooting of baseball training of US congressmen. Okay, what's going on after we had the Fed last week? They raised rates. They were also quite hawkish. They expressed confidence, and they talked about inflation as sort of a one-off, just ignoring lower inflation, saying that growth is strong, the employment situation is strong, everything is good. Okay, this week we have a follow-up. We have more of the Fed. Central banks have a strong influence, more than politics. Okay, so this week we have most important event we had yesterday, and it's still felt in markets. This dollar strength came from Dudley. Bill Dudley is the president of the New York Fed, and he's considered a dovish member. Okay, now he was not dovish at all. He was quite positive. He talked about high confidence about the US economy, very optimistic about growth, about inflation. He said that wages will rise, okay, and also inflation. So everything looks good according to Dudley, and this helped the dollar. Now, another member of the Fed, another also known as a dove, but the president of the Chicago Fed, called Charlie Evans, he remained relatively dovish, but the US dollar ignored it. What does this tell us in general about the market? That the momentum is now with the US dollar, okay? Everything that is positive for the US dollar has an impact, a positive impact on the US dollar. And things that are negative for the US dollar are relatively ignored, okay? Evans did say the economy is doing well. He voted for a hike, but he was worried about inflation. He said it's a big policy miss. Okay, but again, US dollar ignored that. The next hike could wait until December, but it could also happen in September. Remember, the Fed now also wants to reduce its balance sheet. It just has too much money out there, 4.5 trillion US dollars, and they might first begin reducing this balance sheet in September and then raise rates again in December. Of course, it's a bit far off. We just had the latest Fed decision last week. Okay, more data last week after the Fed. We did have some data that did weigh on the dollar, because all the data points that were released after the Fed decision were a bit weaker than expected. So there was housing data, housing starts and building permits. It was the US consumer confidence. It fell short. It's a very fresh figure for June. It was also the last figure released last week, so it dropped to 94.5. Not good news. Again, also US industrial output disappointed. And when all these figures, even though they're not the most important ones, when all of them came out a bit worse than expected, the dollar did retreat. But again, just a bit. And this week, with more Fed speak, more optimism, we're seeing the US dollar react quite positively to that. Next events on the agenda, we have a speech by Stanley Fischer. He's number 2 at the Fed, but he usually doesn't say too much, okay? We also have another member of the Fed. We're seeing the Fed having a lot of impact. That's why I'm highlighting these events. Another member called Kaplan, he will be talking later today. On Wednesday at 2 GMT, we have existing home sales. That's most of the market, but new home sales have a bigger impact. On Thursday, US jobless claims. And on Friday, new home sales, probably the most important data point of the week. But the Fed members who are speaking they have, I think, a bigger impact at this moment. Okay, in general, dollar yen, most sensitive to US indicators. We're seeing its strength right now. Rises with the chances of a rate hike. Well, of course, we're seeing that. Falls when Trump is in trouble. Politics is not expected to be on the agenda this week, but you never know. Politics is a lot of uncertainty. It falls on geopolitical worries, but the Qatar situation and North Korea, they seem to be a bit on the back burner. Okay, now enough talk about what's going on. Let's just show you the charts. So we'll use again, as I've mentioned before, the MT4 platform brought to you by OctaFX. So let's move to the dollar yen chart. This is a daily chart. Currently we're at 111.60. Okay, we had a move to the downside. You can see the pair falling in this downtrend channel, and this wedge, this triangle narrowed down. Eventually we had a breakout to the upside, and since then the technical direction is up, and it's of course backed by what we're seeing by the Fed. So what are the levels we should be on the lookout for, what we should be watching? So if we begin from top to bottom, the top of the cycle was 114.30. Okay, that's really the sort of ultimate goal for dollar yen. Then 113.15, okay, which was support when the pair traded at a high range. Then 112.10 right here was resistance on the way down. Then we're followed by 110.70, which was recent support when we already began the move to the upside, and it's followed by 108.80, which was the most recent low. The cycle low seen earlier this year was 108.10. Okay, so these are the levels for dollar yen. Okay, so we talked about the dollar. We're seeing the biggest influence on dollar yen, but we're seeing the US dollar strong also against other currencies. Now let's move to the world's most popular currency pair, euro dollar. So what did we have lately in the euro? We had a report coming this morning that Draghi wants to delay tapering. He was expected to provide an announcement about stopping to print money already in September and to begin it in the beginning of next year. But according to this report, he is keeping his cards close to the chest, does not want to reveal too much. And if they would delay the decision to after the German elections to later on this year, it could be negative for the euro. Markets do not like uncertainty, and delaying the announcement about printing less money could make markets thinking that they could continue printing money. Again, negative for the euro. Okay, so that's another driver for the euro to the downside, but we also have as I mentioned, the hawkish Fed speak. On the weekend, we had the last round of the French elections, the second round of the parliamentary elections. Macron, the president, won the parliamentary majority, not as much as was expected, and turnout was a bit low, so it takes a bit out of the sting. But all in all, the French president, the second largest economy in the Eurozone, he has a mandate for reform. After the German elections, I think we will see more coordination between the biggest countries in the Eurozone. that should be in general positive for the euro, but it was already priced in. We already knew after the first round of the parliamentary elections that he's going to win a majority. Okay, Greece, last week, they did receive some money, 8.5 billion euros, but they didn't make any, Greece and the creditors, the EU, the IMF, did not make any long-term deal. So, as always with this crisis, it's always going to be there. The can is being kicked down the road, as you may have heard. So, we could see something new related to Greece later on this year. It's a never-ending story, currently in the back burner. Okay, and we had the final inflation figures on Friday for May. No surprises there, they were confirmed. Okay, so that was turned out into a non-event. Okay, the next big euro moves. We have the current account later today, second tier figure. We have the economic bulletin from the ECB. That could be more interesting on Thursday. And we also have consumer confidence on Thursday. All these events could move the euro. But again, when we have these unexpected events like what we heard about Draghi this morning, it could have a bigger move. Okay? And we have, German manufacturing PMI. We have all the forward-looking purchasing managers indices. On Friday, lots of figures. This is the most important one, the German manufacturing PMI. The data from France and services PMIs are a bit less important. Okay, in general, euro-dollar. We're now seeing euro-dollar in range, trading in range. No more upside momentum, okay? Because the ECB went relatively dovish, not so, still optimistic on growth, but not so much on inflation. The Fed was hawkish, a hawkish hike, very optimistic about the economy. So the advantage that the euro had in monetary policy, that's lost. That's why we're seeing stability. Why stability and not a downturn? Because politics just look better in the Eurozone. The French elections unleashed the upside. Growth is stronger in the Eurozone, at least in the first quarter, in comparison to the US. And politics look more stable. So we had an uptrend in euro-dollar. Now it turned into sideways trading. Okay, and let's just show you what I'm talking about on the chart. So let's move here to euro-dollar. Again, on the OctaFX MT4 platform, we had, since the beginning of the year, this uptrend. And the pair failed several times to reach or to break above 113. 113 was also the high seen in November, the 7-month high. We're not breaking above that. And after repeated failures, what cannot go up must go down. Currency pairs move to the area of least resistance. So we're seeing euro-dollar slip lower. So currently 111.48 at this very moment. And the levels to watch out for will begin if we do break above 113. I'm looking at 113.60. It used to be an important line back in September last year. Then we have, of course, 113. You can see here the most recent line of resistance is 112.30. Okay, so that's the top of the current range. The bottom of the current range is 111.35. We're quite close to that. Okay, these were lows that we've seen last week. Okay, if we fall below that, we have a very busy area there of lines of that's already below the current range. We have 110.75. That was support here. 110.25, which was a swing high in April, and then we have much lower. We have over there the 108.40, sort of the bottom of this range. Okay, the range before the previous high range. All in all, euro-dollar is going sideways. Let's continue with the UK. So many things going on in the UK. Let's bring you up to speed. So Brexit talks began yesterday, finally, after almost a year. And it began with the UK accepting to first talk about the divorce agreement. Okay, how much actually the UK will have to pay the EU to get out, and basic things like rights of EU citizens in the UK and the other way around. Nothing market moving at this moment, but only later they will talk about trade, so it's uncertainty at the moment. We had another terror attack in London. The Queen's speech, a vote of confidence actually in the government, is planned for tomorrow, for Wednesday, but there is probably going to be a deal between Theresa May, Prime Minister, her Conservative Party, and the Northern Irish DUP. The government is in trouble over this terrible tragedy, the fire in the Grenfell Tower. So it might impact political stability over there. And there is some softer Brexit talk from the Chancellor, Philip Hammond. As you're watching this webinar now, he's speaking in Mansion House, a speech that was delayed because of the fire. And the tone about Brexit is softer, but that was we already got a preview for that, so that is not such important news at the moment. Hopes for a softer Brexit in general support the pound. So now we're seeing the US dollar strengthening, but a bit less against the pound. The pound is still weaker than before the elections, but we're seeing some kind of small tick to the upside because of these hopes for a softer Brexit. Softer Brexit means, at least for me it means, because everybody has a different definition, more trade, and that's what markets want to see. Better trade agreement with the Eurozone, with the EU, sorry. Bank of England, we had a surprise from the Bank of England last week, Thursday. We talked about one member voting for rate hike. Actually, we had three out of 8 wanted a rate hike because inflation is rising. But yeah, inflation is becoming worrying. Standards of living are falling in the UK, so prices are rising faster than wages. I'm suspecting that these 3 members that voted for rate hike, it was a bit orchestrated to lift the pound. Why? Because central banks prefer to influence the currency without taking action, without raising rates. Okay? They would prefer to keep rates unchanged while the pound would be a bit higher, so they would have lower inflation without hurting lending in the UK. Anyway, it had a positive impact on the pound. Data in the UK, slide in home prices. We're seeing retail sales are going down more than expected. The data isn't looking that good. So after we had a Brexit referendum last year, we had the second half of 2016 was positive, but things are not looking so good right now. We have Mark Carney, the Governor of the Bank of England, delivering the delayed speech. We're probably going to hear more of the same of what we heard in the rate decision. Tomorrow, Wednesday at 8:30, public sector boring. We're going to know how much the government, how its coffers are doing, if it has more money or less money. Another Bank of England member to watch out for, Andrew Haldane, is going to speak Wednesday at 11, and we have another figure, the CBI industrial order expectations, on Thursday. In general, lots of things moving the pound. So let's begin from the good, bad, and the ugly. Good is that there are hopes for a softer Brexit. Again, with the speech of the Chancellor, this is positive. Another good thing is that we had the hawkish Bank of England. What we mentioned. The bad is political uncertainty. The biggest party, the Conservatives, which are the ruling party, do not have a majority in Parliament. And another bad thing is economic weakness. We're seeing wages not looking so good, retail sales slowing growth in the first quarter. And the ugly, well, Brexit talks. They had a good start. It wasn't ugly on the first day, but the rhetoric before that was a bit ugly. So watch out for any Brexit headlines. Each time we're talking about no deal is better than a bad deal, that could be negative for the pound. Okay? So with all these factors moving the pound, let's look at the chart. So here we are, clearly a lower range. Okay, we've seen that downfall because of the elections. Currently we're at 126.80. Maybe things are, we're still basically in the lower range. We'll talk about levels from top to bottom. If we do have a surge to the upside, we're looking at 130.50. Under that 129.25 right here used to be resistance. The top of the current range is 128.20. Okay, the post-election range. We have in the middle there very busy levels, 127.75, which was the bottom here, 127 and 126.40, the lowest level that we've seen after the UK elections. Currently, we're 40 pips above that, still a safe distance. If we have another crash, we're looking at 125, a very round number of course, and 123.50, much lower. Okay, so the pound was significantly hurt after the UK elections, but hopes for a soft Brexit keep it bid. Okay, let's talk about the Australian dollar and the Canadian dollar a bit quickly. We had the governor of the Reserve Bank of Australia worried about wages. Seems like a global phenomenon. Moody's rating agency downgraded Australian banks. The big four Australian banks got a downgrade related to fears about mortgages. Sounds a bit familiar with similar to Canada. The RBA meeting minutes repeated the statement, we didn't learn anything new. And house prices in Australia related to the downgrade, they are year over year 10% higher. So if house prices are rising too fast, there's always a fear of a bust. Okay, the next big Australian events, we have a leading index by the Melbourne Institute on Wednesday. Not too much on the agenda. What's going on in general in the Australian dollar? The gradual rise may have reached its limit. It's mostly because of the strength of the US dollar. Okay, there was recently some positive data from Australia, from China, but again, we're seeing the US dollar quite strong as well. Moves are relatively limited. Okay, let's look at the chart. So, when we talked at the beginning about euro dollar, about that the uptrend turned into a sideways trend, here we're not seeing that yet. We're seeing some kind of consolidation, and the uptrend could continue. But we reached some kind of limit here. Okay, so we have this uptrend. It still continues. We're not sure if this is a consolidation phase, which is normal, before the pair gains fresh momentum to continue to the upside, or just a temporary pause. So from top to bottom, 77.50 is resistance, followed by 76.80. Okay, this line right here. Recent level of resistance, 76.35. Very tough here. You can see how the pair just cannot move above this line. The bottom of the current range is 75.60. Further support here, which used to be also support and also resistance, so it's also an important line, is 75.15. It's followed by 74.10, 73.75, and 73.25. Okay, these are the levels. Okay, let's talk quickly about the Canadian dollar. We had some interesting stuff there last week. So, the Bank of Canada's hawkishness also there is still felt. That was Wilkins and then followed by Pelot's. Manufacturing sales also beat expectations, rising 1.1. The oil slump, the drop in oil prices, keeps the Canadian dollar a bit depressed. Okay. Later this week we have wholesale sales in Canada today, 12:30 GMT. Retail sales on Thursday, and on Friday inflation data. So, and I would say inflation data is the most important thing for the Canadian dollar, because the Bank of Canada acts according to inflation. If they're really hawkish, there's talk that they will raise rates in October. It all depends on inflation genuinely going to the upside. Okay, so that's the most important event. Quite a few, but all the events are important. Dollar CAD is now on a downtrend. Okay, that's clear. We're very far from the highs, and the trend is, we'll see that soon. Domestic strength. The Bank of Canada's optimism about all the economic figures, their employment, GDP, it has the upper hand against oil. 130 is a big barrier on the downside for dollar CAD. Let's look at the charts. So dollar CAD, the daily chart, here you can see the downtrend. Okay, we topped right here at 137.90, that's the top level. 136.40 was support at the high range, and then we have 135.40 as the top of one lower range. We fell below 133.80, which was the bottom of that range, which now turns into resistance. Another line to mention here is 133. The low so far, 131.60. If we break under that level, we're looking at 130. Okay, So that's it for today. Thank you very much, everybody, for coming. Comments and feedback are more than welcome. Trade safely. Remember that the trend currently is dollar strength. It might last a bit longer, but trends also can change. So trade with a lot of care. And see you on Thursday. Thank you and bye-bye.